Welcome back. Imagine institutional players quietly stacking thousands of Bitcoin behind the scenes, while Ethereum teases a breakout to 5-digit highs, and stablecoins are about to get dramatically faster. Stick around to see why these three hot developments could shape crypto's next big wave, and make sure to hit subscribe and ring that bell so you don't miss the next update. ETH could surge towards 16K this cycle. Analysts like Edward project a rise to 15K, 16K, driven by Ethereum forming a long-term ascending triangle, strong technical patterns, and massive spot ETH ETF inflows now exceeding billions of dollars over recent weeks. A breakout above the $4,000 resistance line, especially if institutional demand stays high, might trigger price discovery toward mid-cycle targets of $16,000 to $16,700. In some optimistic scenarios, prices could even go beyond 17K by 2026. The implications? If ETH holds above support around $3,800 and ETF flows keep pouring in, we could witness one of the most explosive altcoin runs in years. Almost immediately after a hawkish Federal Reserve meeting, Bitcoin rebounded nearly 3%, climbing toward $119,000, as corporate treasuries reportedly added nearly 30,000 BTC in just 48 hours. Meanwhile, U.S. policy insiders reaffirmed plans to establish a strategic Bitcoin reserve expected in short order, signaling strong government support of BTC as a reserve asset. Institutional accumulation seems to be shifting market perception. Bitcoin is being viewed as a strategic allocation, not just speculation. If this buying continues, analysts see push toward 125K or beyond as realistic next targets. Lastly, infrastructure innovator Alchemy has rolled out its new Cortex engine, slashing latency in blockchain API responses by roughly 66% from 300-400 BRCs down to under 50 ms. This upgrade is expected to speed up stablecoin transactions significantly, improving settlement efficiency across major issuers like Circle and Paxos, and bringing crypto closer to real-time payment levels seen in traditional systems. For users and builders, this means smoother experiences for payments, transfers, DeFi interactions, and more, and could re-energize stablecoin utility globally. Now let's dive into a deeper exploration of each story, connecting the dots and showing why they matter for traders, investors, and anyone interested in crypto's next chapter. ETH rally may be brewing. The ascending triangle built over months is a textbook breakout pattern, and with spot ETH ETF inflows now in the billions. Institutional appetite has never looked stronger. If ETH decisively breaks the $4,000 level and holds, technical models point to a measured target of $16,700, a potential 350% gain from current levels. Conservative voices still argue for a Q4 target of 8K, 13K, but even those levels would represent a doubling from today plus. A pullback to support around $3,500, $3,800 could be healthy consolidation before another leg up, or it may serve as a buffer zone before momentum resumes. Switching gears, Bitcoin's recent jump past 119K wasn't retail hype. It came amid massive treasury-level accumulation, 30,000 BTC added in just 2 days, with companies acting at scale. At 119K current price, that's a multi-billion-dollar move. Add in renewed talk from U.S. officials about creating a strategic Bitcoin reserve, and the narrative shifts to Bitcoin as part of national asset strategy, not speculation. The market responded rapidly. If further institutional demand follows, we may soon revisit 125K, 130K, or more. On technology, Alchemy's Cortex upgrade is quietly transformative. Stablecoins handle payment volumes rivaling Visa, MasterCard, but latency has always been higher. Now, by reducing response times by 66%, Alchemy allows near-instant execution for stablecoin rails. That improvement should boost developer confidence, accelerate DeFi interactions, and offer end users faster settlements, reducing friction and increasing adoption across payments, trading, and remittances. Think about it. Faster rails make stablecoins. More useful, institutional adoption pushes ETH and BTC higher, and regulators signal strategic acceptance. Together, these three stories weave a larger picture: crypto moving from niche speculation to foundational infrastructure. To wrap up, Ethereum appears poised for its biggest move of the cycle. Bitcoin is reasserting strength via deep-pocketed accumulation and policy support, and stablecoins are becoming dramatically more efficient thanks to infrastructural upgrades. So what do you think? Will ETH break through to 16K or higher? Could Bitcoin's institutional run usher in a new era of price discovery over 125K soon? And will ultra-fast stablecoin rails power the next wave of crypto adoption? Let me know in the comments below. If you enjoyed this breakdown, please give it a thumbs up, subscribe to the channel, and hit the notification bell so you never miss our next Crypto Megatrends update.